So it's really funny how they've basically been trying everything in their power to break something. And yet we have Bitcoin continuing to move to the upside. I mean, we even have the S&P like 2% away from the all-time highs, right? It seems like it's not really working. But getting back to the whole Bitcoin thing with Gary Gensler and the SEC, I want to just play you this clip. This is just like an introductory before we get into the deeper part of the video. So they were asking them about Bitcoin, and he just watch this. He almost gets like offended.
Obviously, the commission and the staff of the commission is still hard at work on a number of issues. One of them dealing with a number of filings of spot Bitcoin ETFs. You know, Mr. Chair, I have to ask you this question. There has been a lot.
I suspected we did something very significant about the $26 trillion Treasury market, which is really the base of our entire capital markets. It's how we fund our government. It's how our Federal Reserve does monetary policy. It's how we maintain the dollar dominance around the globe. And you want to ask me about crypto?
In my defense, Commissioner Ueda also brought up crypto in this open meeting.
Priorities. I mean, the U.S. Treasury market is a very consequential, very important market. Crypto securities are not only much smaller, it's not how we fund our government, it's not how we conduct monetary policy, and for many investors, they've been harmed in that market. And they're being harmed because there's too much non-compliance. And it's not just non-compliance with securities laws, it's non-compliance with a raft of other laws. Our sister regulator in the market space, the Commodity Futures Trading Commission, the U.S. Department of Treasury, and Financial Crimes Enforcement. But again, I do ask, and if you look at the focus and the priorities, the U.S. Treasury market and what we did today is really quite important to our capital markets.
So again, Gensler takes the opportunity to talk about how it's rife with fraud and all this manipulation and bad actors. But here's the interesting thing. So the SEC announced that they actually rejected a petition submitted by Coinbase, obviously the largest cryptocurrency exchange in the US, to establish cryptocurrency rules and regulations. So Coinbase literally reached out and said, hey, I think it's time that we update this whole Howey test. We're working on something that's like 100 years old, right? And in the letter, the SEC basically said, no. We're not going to change it. They said that the existing framework is fine, right? Because rules that were made 100 years ago totally apply to cryptocurrency, right? In the statement, Gensler said, I was pleased to support this decision. Existing laws also apply to crypto securities markets. The SEC is addressing crypto security markets through rulemaking. No, they're not. I haven't seen any rulemaking whatsoever. I've just seen how Wells notices and fines, and they say it's important to maintain discretion. So again, why, and I do want to play the second part, because as you guys can see right here, again, you have Commissioner Hester Pierce, Commissioner Mark T. Ueda, I've never actually heard his name pronounced. They said, we are disappointed that the commission is not hosting these important conversations. We will have an open ear for conversation that others host, and, basically they're calling them out, right? And again, like I said, before I play the rest of this video, so there is the idea, right, that, this threatens the system, right? Bitcoin puts the money into the individuals. It goes around the banks, and, JP Morgan's pissed off because he's not going to get his fees, right? But at the same time, if you just think about the selfishness of the SEC, right now they are just they're having a good old time, right? They're just fining people left and right? Oh, you had an unregistered security, pay us this, pay us 40 million, pay us 100,000. You're an influencer that talked about something, right? But again, they're not making the clear guidelines. And if they made those clear guidelines, well, then they would have to abide by them, and then the rules would be clear. But because the rules aren't clear, what happens? Well, they're able to reach out to these smaller people. Like, for example, not everybody has $50 million or something like Coinbase to fight the SEC. So a lot of times they're just going to settle it in court. They're going to plead guilty, pay the fine, and move on. And the SEC continues to rake in all of this free money by keeping it specifically vague and opaque, so you don't know the rules, right? Well, again, they were pressed over here about the ETF approval. Essentially, they lost the grayscale case. They are really, what they're doing is they're basically lying. They're pretty much lying in court, and the judges are calling them out. So you could see the shift in the tone, and this is where they talk about the significance of actually starting to have some meaningful conversations with a lot of these ETF appliers.
So what is your question about Bitcoin?
We have seen in recent days SEC staff engaging with issuers, of a number of which have filed for spot ETFs. We've seen a number of amendments to those filings. It seems that market participants in crypto have a sense that we are reaching the end stages here. Typically, is this kind of engagement with the SEC not prejudging anyone filing, but the level of engagement we are seeing signifying of things getting easier, closer to resolving, or things getting more difficult?
Again, we have, I think, somewhere between 8 and a dozen filings in front of this agency with regard to exchange-traded products around Bitcoin. And the staff of the various divisions respond when market participants have filings. We also had a court case earlier this fall in this regard, and so we do things according to our authorities and how courts interpret our authorities, and that's what we'll do here as well.
I think you're referring there to the Grayscale case.
And you had Bloomberg Intelligence ETF research analyst James Seyffart basically saying in a nutshell, I think the SEC has kind of been backed into a corner here by the judges, basically throwing out every decision and reasoning it's used to deny an ETF in the past. And remember, once the court says that this is not a legitimate reason to deny an ETF, they're going to have to get clever and come up with other reasons because you can't use the same reason again, right? We've already had a decision in the court. He goes on to say, I think the SEC and Chair Gary Gensler know that they were overplaying their hand a bit and are kind of forced into a corner right now, right? He goes on to say that the court threw away every decision and reasoning that the SEC used to deny a Bitcoin ETF in the past, and Gary Gensler knows that they were overplaying, right? So again, we just said that, but he says the SEC bluffed and Grayscale called it. And again, talking about the shift, even though, yes, he still is vague about it, he skirts around the details, still won't say whether or not Ethereum is or isn't a security, you can see now he's over on CNBC and he's discussing that, we can't deny the fact that we did deny it, and the court is telling us that we can't do that anymore, so we're going to have to be kind of forced to take a look into it, and we're really running out of reasons to deny this ETF.
On another topic, approval process going for a spot Bitcoin ETF. I know you're facing a window in early January. What does that look like?
Well, Sarah, we have, I think it's between 8 and a dozen filings. I'm a chair of a commission. I'm not to prejudge anything, so that's going through the process right now. And as you might know, we had in the past denied a number of these applications, but the courts here in the District of Columbia weighed in on that. And so we're taking a new look at this based upon those court rulings.
Market's excited about it.
And it honestly is a shame. It's almost embarrassing to think that these are some of the three-letter organizations that are in the United States here to protect its customers, right? Because they totally protected us from FTX, who he had meetings with on multiple occasions, but refused to ever get back to Coinbase CEO Brian Armstrong, as well as, Luna and Celsius and BlockFi, right? But you guys, you're protecting the investors, right? Now, something interesting that was crazy news that not a lot of people were talking about was the fact that Bitcoin will be recorded at fair value under the new FASB rule that was issued. You can see right here, those crypto assets at fair value reporting periods with changes in fair value recognized in net income. So this is huge because previously companies could only value their Bitcoin at the lowest price since they bought, which means they would have to record losses, but not the gains when the price recovered. Bitcoin keeps winning. And honestly, I don't really feel like diving into this because it's kind of a boring topic, but the reality is that these are all things in the traditional system that are being applied to Bitcoin. If Bitcoin was this big old nothing burger, if it was just a fad, if they were looking to ban it, right, or whatever it is that people think is going to happen, we would not have all these ETF applications. We would not have the SEC adding literally just a couple days ago a cryptocurrency tab to investor.gov. We would not have all of these talks that are going on right now. And just to kind of break down why 2024 is going to be massive, like James Van Straten pointed out, January, most likely an ETF approval. I mean, if they deny this thing, somebody was saying it was almost like, you guys remember back in Charlie Brown, the Peanuts, when they would like pull the football out? They're saying it could be like that, but I mean, realistically, again, they're running out of grounds for denial. February, you could have the ETF potentially trading, right? It could take a little bit longer. I mean, it's not like, and again, everyone thinks the ETF's going to get approved and then all the money's going to rush in. It's going to take months to even, throughout the course of the year to really get the ball rolling, right? There's a lot of applications. Then there's also the financial advisors themselves. it's a very, very long and interesting road ahead, but nevertheless, it is a road to really just success for Bitcoin in the long run. March, potential for first rate cut. April, of course, the Bitcoin halving. May through November, rate cuts and liquidity. And then, of course, the big December, FASB is expected to adopt their fair value accounting for Bitcoin. So, I mean, rate cuts and liquidity. I mean, you know what happens when they turn on the money printer. If you're watching this video, you have already made it through the worst part. They were trying everything they had to break the system, and yet Bitcoin continued to prevail, okay? So again, I just think if this is what Bitcoin was doing during massive rate hikes and tightening, can you even imagine what it will do with liquidity injection and money printing? I still think a lot of people don't understand, exactly how big this is. And Mark Yusko actually explained the significance of this $30 trillion shock and what really happens when you have all this money on the sideline and these big players finally getting off what he refers to as zero.
I think missed sometimes is just the amount of money out there that is in these little boxes, these rule boxes. And there's 30 trillion by Eric Balkunias's, I think I'm saying his last name right.
Balkunas. Yeah.
Balkunas, yep. And, 30 trillion, it's a big number, that can't at this point buy Bitcoin directly, right? But they can, in many cases, not all, buy things like, MicroStrategy or Coinbase because they're listed companies, as opposed to, UBS won't let me buy GBTC, whatever. But when this ETF happens, that's going to be a dicey period, because then it's like, well, I don't have to buy MicroStrategy, which is a questionable software business tacked on to a big honeypot of Bitcoin. And I don't have to pay a premium anymore for Coinbase. And I think Coinbase will do well because their business is going to skyrocket, right? Because they're going to do custody for these ETFs, and they're going to, get ancillary benefit. And when the institutions really come, because yes, there's an institutional bid, but it's with this many people. I mean, I'm not, and I actually have numbers to back it up because I'm still smiling and dialing and trying to get people to meet. It's crazy how many people in the institutional world are still stuck on zero, literally zero. It's 80+% of institutions. But the reason you need Bitcoin in your portfolio, and all the institutions, every single one of them is going to have it. This is the crazy thing. Every single one of them will, and I've been saying this for years, right? Get off zero. I've been saying since 2017. And all that means is, and I said 10 years, and now we're, 6 years in, so it's only 4 more years from now. You will be deemed fiduciarily irresponsible.
Oh, and didn't we call it, guys? All of a sudden, look at these new articles that are coming out. Remember how bad Bitcoin was for the environment? Remember they had predicted that by 2020, it could be using more electricity to mine Bitcoin than like the world or like a country or something? Well, guess what, guys? That's not happening. In fact, they say a fresh look at Bitcoin's ESG credentials. Could Bitcoin actually be ESG friendly? Wow, that's an interesting narrative. Just like Larry Fink had said several years ago, basically that he wouldn't touch Bitcoin with a 10-foot pole. He doesn't even think about it. And now it's a flight to safety, a flight to quality, and we're rolling out the ETF, boys. Again, this is why I say don't listen to them. Watch what they do, okay? Because they talk a lot and they tend to do the complete opposite, right? And this is that crazy $64 million prediction. This is by Luke Mikic. He's over at CoinBeast. Now, this might be a little bit crazy, but I do like to add these fun little predictions in here, so I just kind of wanted to end the news segment with this.
64 million by 2030. So I wrote this article in 2021, looking at Bitcoin through the lens of it being an emergent technological revolution. And I said, hey, look, if Bitcoin is going to be adopted by the masses, it's going to be adopted in an exponential fashion. For every $1 that flows into Bitcoin in a very narrow window of time in 2021 in the bull market, they believe it pushed the Bitcoin market cap up by like 119x. So I think the larger the amount of capital trying to come in, certainly I think we could have a higher Bitcoin multiplier effect. The multiplier effect